What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Today we have a live CPI release and reaction. We're going to go through an article that's looking at some forecasts before and continually refresh the BLS website and be waiting for that drop. Guys on Telegram, I did share this link just a minute ago in the channel, so you can get that archive link. Bring that up here for the live stream viewers. By the way, I am streaming on YouTube, Telegram, Twitch, and Twitter. So you can find me there and watch me. I go out for sure Monday, Wednesday, Friday. I also do Thursday with FedWatch and on Bitcoin Magazine's channels and periodic other things. I also drop most of my links and things I'm reading and watching over there on Telegram. All right. So this is a article out this morning from Zero Hedge, and the headline is CPI Preview. Here's what the street expects and how the market will react. Tomorrow's CPI report will be unique in that for the first time since inflation peaked last June, consensus expects headline inflation to remain unchanged at 5%, while core inflation, which last month surpassed headline for the first time since 2020, is expected to decline just barely from 5.6% to 5.5%. Although there are those, such as Goldman and JP Morgan, who see both headline and core inflation, annual inflation posting a modest rise. And we can see this chart here in this article. The year over year dropped below the core year over year, and that's the first time since 2021, early 2021. Okay, on a sequential basis, the street is looking for an April headline CPI print of 0.4% month over month, a big bounce from prior 0.1%, while core is seen unchanged at 0.4%, like last month, 0.4%. In its preview of tomorrow's CPI print, Goldman expects hotter than consensus month over month at 0.47. Oh, that's for core. And another hotter than expected core print in the form of a 5.6% annual increase. All right, so that's Goldman. And here's a little chart of what they're expecting. I went through this early this morning, and really there's not a bunch of difference. Owner equivalent rent, they're expecting it to increase slightly. What were the other categories that they expected to increase slightly? We have medical services to be less negative, but still negative. What else do we have? I saw another one that was a big increase. Used cars, but that's only a 3% weighting. So, I understand this is math and they added this up, but it doesn't seem like there's a big increase. Okay. My expectation is for 0.4%, maybe even under that. I think we will continue to undershoot these inflation forecasts as we rapidly drop to 2% by the end of the year. All right, let's continue on this. Sorry, I just took my kid to school, and so I rode my bike fast to get back here, and we are going here right now, so I'm drinking some water. But all right, Goldman expects a 4% increase in used cars. We covered that. Airfares declining by 2%. What else does Goldman expect? Rents to be slightly higher. We covered that. All right, let's get into JP Morgan. Turning to JP Morgan, full CPI preview note available here for professional subs. The bank's chief economist is also above the street in both headline month over month, 0.5% versus 0.4% survey. Okay, core at 0.43% versus 0.4% survey. So JP Morgan is also above trend, and we should have the numbers might have dropped. Let me refresh this. April is out. Here we go. CPI for all items rises 0.4% in April. Shelter, used cars and trucks, and gasoline up. So this is this is right bang on the survey consensus forecast. So let me read this here. The consumer price index for all urban consumers rose 0.4% in April on a seasonally adjusted basis after increasing 0.1% in March. The U.S. Bureau, BLS, reported today. Over the last 12 months, all items index increased 4.9%. Okay, so 4.9 is an undershoot versus 5.0, which is what a lot of people were imputing that a 0.4% would mean a 5%. So this must be rounded up to 0.4%. The actual release is in like 4 decimal places. I think it might be 3. So this month over month might be 0.378. Okay. And they rounded up to 0.4. But when you take that into the 12 month, it caused it to be below the consensus forecast for the 12 month, which is very interesting and can kind of mess with algos, right? The algo traders, they put these numbers in, and if they're scraping the website, and as soon as it pops up, if it's 0.4 and 5.0, then they trade a certain way. If it's above or below that, they trade a different way. So these rounding errors could cause a difference in how the algos are reacting. So that's very interesting. Okay, let's go to the next paragraph. The index for shelter was the largest contributor to the monthly all items increase, followed by increases in the index for used cars and trucks and the index for gasoline. The increase in the gasoline index more than offset declines in other energy component indices, and the energy index rose 0.6% in April. Okay, that's very interesting. And last month we went over this on FedWatch, which we will do again most likely tomorrow. And the question was, hey, CK and producer Chris, they were like, we're seeing gasoline go up. How come gasoline went down on the CPI? This was last month. And so I had to look it up. And really the way I used to look at it is from the start of the month to the end of the month, what was the change? But that's not how they do it. Okay. They look at the average for the last month versus the average for this month or the previous month to last month, because they're always, 1 month behind on CPI, right? Or a few weeks behind at least. So you could have, at the end of the month, prices going down for gasoline, but that doesn't move the average all that much. And then the following month, you can have gasoline prices trending higher. They could even go, 30, 40, 50 cents higher. But the average is below the last month's average. So anyway, that I just wanted to explain that a little bit more because that was an open question on FedWatch last month. But we have here that the energy index rose 0.6%, due in most part to the gasoline price. And we know that there has been a lot of back and forth on the oil market. I've been one of the first people to call a top in oil. I think it was a day after the top. And also I've called for long-term decline in the price of oil, which most other pundits that I've seen, especially the ones that get the most clicks out there, they're saying, oh, $200 a barrel oil, $300 a barrel oil, because, this fear mongering is the thing that gets the clicks. Fear mongering is the thing that people tune in for. It's crazy. I was starting to work on a quick little piece on Zoltan because, he's out now at Credit Suisse, and I've been calling his stuff out for a long time. I saw a Jeff Schneider tweet calling Zoltan out too. It was pretty interesting. But I've been the most explicit calling out Zoltan for just having idiotic takes. Okay. But yeah, he gets all the clicks. He's the famous Credit Suisse interest rate analyst, and he's consistently wrong. Maybe one of the reasons why Credit Suisse had all the trouble that it had was because he was directionally incorrect. He was 180 degrees away from being correct. But he's anyway. Let's go on this. The index for all items less food and energy rose 0.4% in April. as it did in March. Indices which increased in April include shelter, used cars and trucks, motor vehicle insurance, recreation, household furnishings and operations, and personal care. The index for airline fares and the index for new vehicles were among those that decreased over the month. The all items index rose 4.9% for the 12 months ending in April. This was the smallest 12-month increase since the period ending April 2021. So, very interesting. Let me go back to this chart here on this page, this article that I was reading from earlier. And you can see the big run up in CPI and then the big crash. What is people's definition of transitory? That's my question, because this looks extremely transitory. And if we get down by the end of the year, we get back down to 2%, which is very possible. I mean, we will be under 4% next month, most likely. So if we can get back down under 2% by the end of the year, that will be transitory. People laughed at the transitory people. I've been consistently on the strong dollar transitory camp the whole time. Anyways, let's go to the charts. And we'll go down to the 5-minute. This is on a delay, however, so we won't be able to see the initial reaction from the futures market. So let's go to Bitcoin because we'll see the reaction there. And a huge spike up. Wow. Wow, wow, wow. This I'm going to share with Telegram. 5-minute chart. The initial reaction tends not to last, be a fake out. But we can see that early this morning, Bitcoin was trending higher. It had broken the overnight downward trend back to a higher trend and has continued with the CPI release. Let's go to the daily. And I've been talking about this box here. On the report on Monday, I do a very brief price analysis on my free newsletter. And that was the box that I pulled out saying, hey, this is the most likely place for a bounce. This kind of green zone that you see on the chart here, this was what I drew this morning, just showing this kind of support area. Okay, if this is the bounce, this is a higher low. Let me share with Telegram. Okay, so we didn't, if this is the bounce, we didn't quite get into this box once again, because the box I had over here didn't quite get hit either. The box from back on April 24th through 23rd through 24th, that one didn't get hit either. I have erased it since, but this box, if it doesn't get hit either, this is pretty strong. Let's bring up the 50-day moving average. Okay, so there is the 50-day moving average. This is fundamentally different than the one back in April because of this 50-day moving average. This is considered the 50-yard line. You are in bearish territory if you're under. You are in bullish territory if you're over. And as you can see, we have recently just broken down below that. So we have to say that this is semi-bearish territory, even though we could have a nice bounce. And we still are in a general bull trend, of course, up like 65% on the year so far. And I'm expecting a big Q2 and Q3 for Bitcoin. If you're new to my content, I've been saying that the end of Q3 is the main time for financial stress. End of Q1 is the second most likely time of the year due to earnings, due to fiscal year, due to other things. And that's what we saw at the end of Q3. We saw some banks starting to have problems because they're having to actually report earnings, mark to market some of their assets, etc. Okay. And so that we saw some stress come out. I'm expecting that stress to be relatively contained until we get to the end of Q3, and then we'll see what happens there. So far, so good. It's been contained to the plumbing of the system, um, which isn't good, right? That's not that is a deflationary pressure on the overall economy, and we see its effects on bank lending and things, which will translate into CPI. Bank lending is falling off a cliff. Bank loan demand is falling off a cliff, and so that will translate into lower CPI. Lower CPI will translate into the Fed pause. And the Fed doesn't have a mechanical power, but they do have a mystical power, a narrative power on the market. And so when they pause and or pivot completely, like go all the way the other direction, then that will boost risk assets, including Bitcoin and stocks and all that. So that's a broad sweep of what I'm seeing here. Okay, let's see. Are we got the delay over with? Is it a 10-minute delay or 15-minute delay on stock market? Okay, it is a 10-minute delay. I'm going to go down to the 5-minute chart. And we see the same exact reaction here on futures. Let me get rid of this 50-period moving average. And post that to Telegram. And then we're going to take a look at the dollar here next. Let's go back to the daily. So these are some resistance zones that I have been watching for pretty much a year. I would go back to, let's see, I've been watching this upper one since around February, March time last year. And it is still pretty much exactly where we are right now. And so it's providing some resistance for the price. But as you saw on that chart, just the 5-minute chart just a second ago, we are up on the day. So CPI is higher, or sorry, stocks are higher on CPI news. Let's check out the dollar. Dollar is down on the news. Let's go to the 5-minute chart. Wow. Wow. This is, you know what's funny is this is the exact opposite reaction, the dollar dropping. That's the exact opposite direction with that you would expect from low CPI, right? If inflation is going down, wouldn't you think that the dollar should be going up? And we see this exact opposite back and forth every CPI. What gives? What gives on this? Well, it's because CPI actually is not measuring money printing. It's measuring prices. And I mean, it's not a one-to-one here, okay? But if we have higher CPI, we have more economic activity because it is related to money printing. And, you know, if there's more credit expansion, there will be more economic activity because more economic activity is what creates credit expansion. You know, you have to have people taking out loans to expand the money supply. And people take out loans when business is good. When business is bad, they don't take out loans. Right? You have a net deflationary pressure when times are bad because people are not taking out loans, but they are repaying their old loans. You know, they're tightening their belts. So total credit is dropping, or at least there is a deflationary pressure on that total credit amount. So with CPI dropping, that should imply that credit is dropping, which we know from the SLOOS report where banks are surveyed and they say there's higher standards and lower demand for loans. So this is a deflationary time and CPI is dropping. So what does that mean for the dollar? Well, there is less demand for the dollar. You know, if Don't even think of this as inflation and debasement and whatever. When there's dropping demand for loans and for economic activity, there's going to be overall, especially in Forex, because this is a DXY Forex index, right? The relative strength of the US economy is going down. And so there's less demand for dollars. So I hope that was clear. Maybe I should go into that on a longer podcast. But let's check gold. Gold is up. Let's go back to Bitcoin. All right. Bitcoin breaking back out of 28,000. This is a pretty chart. I like this. I like this a lot, but we have some work to do still if we are going to really be convincing. So let's go measure this out here. So the golden pocket for the retracement of this most recent sell-off is 28,900, and I'll share that with Telegram here. So anything short of that pocket, we can't consider a reversal. A reversal would have to go above that to be confident that this was the true bounce that we got there. Anyway, guys, that is going to be it for this brief live reaction to CPI. Once again, we had month over month CPI in April of 0.4%. That was bang on consensus. The year over year number came in under consensus, which was 5%, and it came in at 4.9%. So thank you for joining me. Hope you have a good rest of your day. Guys on Telegram, I will see you right after this show and also all day long. So check out the Telegram, guys, if you're not on it. T.me/Bitcoin and markets. All right, guys. Check you later. Bye.